Yeah. Good evening, students. As you know, that theory lays the path ahead. Practice turns the words to trade. Standards guide and principles light. Experience brings judgment, right? Even knowledge and action stand by stand. Audit excellence becomes our guide, right? When we want to go for swimming, and definitely we have read the books, several books we have read, but when we go deeper into the water, that bookish knowledge alone will not work, right? So for that you must have practical experience, and for you to bridge that gap when you're studying with the help of books, all the standards, auditing related, all the material you are reading while studying for intermediate and final, to have glimpse and to have better knowledge of application, better understanding that when you will be going for audit, how you are going to apply that. So prior to that, to bridge that gap, and in the examination also, when you read the question, you are able to correlate the same. So we have commenced this program, Audit Insights, Bridging Theory with Practice, right? And we have covered preliminary engagement activities, audit strategy, audit planning, and audit program. And today we are moving towards our next, but very, very crucial and very, very important session, which help you that how an auditor will express the opinion. That is very important and crucial role of auditor, risk assessment, and internal control evaluation. Okay. So it's very important topic. My advice to all of you, please understand how an auditor assess the risk, how they respond to the assessed risk, how they evaluate the internal control. And when you will understand and when you will correlate it with your chapter, which you are studying at intermediate and final level, you will definitely be able to correlate. And we have our learned faculty, CA Roshan Bajaj with us, a committed professional with around 2 decades of experience in the field of audit and assurance and management consultancy services. He is into practice since last 12 years. He was associated with Big Four firm for prior to that. He has served various large and mid-sized corporate during these years in sectors like telecom, IT, steel, cement, FMCG, infra, logistic, automobiles, banking, and finance. So he's having vast and rich experience in the field, right? Not only in the same, but also in the field of system development, process restructuring, risk management, financial reporting, etc., apart from auditing and assurance services. He is a regular faculty for imparting trainings to C&AG officials and is also a regular speaker for his domain at various forums. In fact, I would also like to tell you that right now, presently, he is also training at Central Detective Training Institute also, right? So not taking much of the time, because in today's session, we are going to learn risk assessment and internal control evaluation. Dear students, when we talk about risk assessment, whole essay 315 and 330 should click in your mind. So whenever you are understanding the concept, reading the concept, please correlate. So not taking much of the time. Over to you, Roshan sir. I hope your vast experience will enrich the knowledge of our students. Over to you, sir.
Thank you so much, Karuna ji, for a wonderful introduction. And you have already set the tone and context of this session. And I'm sure that people who are attending this session, they will be getting a lot of benefits from this particular course which you have come up with. And I would like to thank the Board of Studies for inviting me as a faculty for this session. And also I would like to thank all the participants, because I always love interacting with young guys, and I'm basically fortunate that I am getting this opportunity once again to deliberate on a topic which is really, really close to my heart. In fact, this particular topic is something which forms the base of any audit. So presently, we are in the era of risk-based audit. You must have heard of this term, risk-based audit, I'm sure. So the basis itself of our audit is risk. When we talk about risk, in the general parlance, what does risk means? So let us understand it from a very, very prevalent example, which we get to see in day-to-day life. Like, say for example, we are riding a bike. So when we ride a bike, it involves various risks, isn't it? It involves that there is a risk that we can basically, there can be incident of accident. Maybe that is due to the error of a third party, or maybe we did not drive well, we did not ride well. So that is the reason. Maybe we are not wearing helmet, or we are wearing helmet or not. Maybe we are not trained well enough to ride a bike. Maybe we are trained enough. So there may be different aspects to it. Even in our when we ride a bike, then also these risks crop up. So against every risk, there has to be a control. What controls? When we ride a bike, what are the surrounding controls that we need to understand? Surrounding control is that we have to obtain a driving license. We have to have that driving license. We have to be of certain age. Beyond that, only we will be able to drive. There is a control that we need to wear a helmet. So that is also again a control. Then the next control is we have to take insurance also. Third party insurance also we take, that if any third party gets hurt, or any damage to his property happens, so even he can be compensated. And similarly, for self insurance also is covered as part of the insurance. So these are very, very small examples of how there is a risk in every aspect of life, and what are the corresponding controls which we have to address that risk. Similarly, audit 2 has a set of risks. So when we talk about audit risk, what do we mean by audit risk? So before, I will definitely present these slides to you, but let me try to set the context. Let me try to introduce you to the subject first. Audit 2 has a set of risks. When we talk about audit risk refers to risk of material misstatement. Risk of material misstatement that would remain in the financial statements, even though the auditor has perused the financial statements, he has already audited the financial statements, but he could not identify the risk of material misstatement which is still existing in the financial statements. He is not able to identify that, and without identifying the risk of material misstatement, he has issued the audit report. That is a risk which we are talking about. So keep it in mind, whenever we are talking about audit risk, we are talking about the risk of material misstatement, which may be there, which may be subsisting in the financial statements, and the auditor has failed to identify that risk. Resultantly, that risk, that material misstatement exists in the financial statements itself. So we will end up giving a wrong opinion. The users of the financial statements, the stakeholders, including the shareholders, lenders, creditors, whoever uses the financial statements, so they will not be getting a fair picture of the affairs of the company. So it has a very, very significant impact on the financial statements. So even you can take one example. If say a girl is getting married to a boy, so before getting married, their family their families do all the due diligence, how much the guy earns, whether he has some bad habits or not. All those things are taken care of before someone is getting married. So what are these? These are nothing but these are controls. Now the question is, where would we identify these risks of material misstatements? How do we identify it? So this particular session is all about that. That at the first place, where we get to see those risks, how an auditor responds to those risks, how the auditor assesses those risks, the significance of those risks, whether a particular risk is a significant one or it is a normal risk, a low risk area, whether it is a moderate risk area. So that classification is also very important when we talk about audit risks. We all know, definitely you must have read through it in your standards on auditing. Sometime back only, Karuna ji talked about SA 315, SA 330. So we are all are aware of there are three types of risks. One is called inherent risk. The second is called the control risks, and the third is called the detection risk. So I would like to make this session as interactive as possible. So can someone or maybe a few people respond to what do we mean by inherent risk? You can use the chat box to put forth your responses. So I would like to see few responses. Let us try to make it very, very interactive, because uh, the foundation of this course is bridging theory with practicals. So unless and until you interact, unless and until you ask questions, you will not be able to comprehend the concepts in a robust manner. So just to confirm, Ayaz, whether they will be able to respond in the chat box, Karuna ji or Ayaz, anyone can you confirm whether they can use the chat box
Yes,
now or
yes,
not?
yes. They will be able to write.
Okay,
And
okay,
I
wonderful.
will let you know the
Yeah,
queries and their answer.
okay, okay. I will not be able to see directly.
Now, you will not be able
Okay,
to. That
no,
will
no
be
problem.
received to me. I will share it to
Okay,
you.
no problem, no problem. So I'll
Yeah.
continue with it then. Okay,
Yes.
no problem. Yes. So there is the first concept which is called inherent risk. Inherent risk is nothing but a risk which is there, which exists there even when there is no control at all. Say, for example, a person is riding a bike, there is a risk of accident. Even though the person is a trained person or not, that control is not there. The person possesses a valid driving license or not, that control is not there. The bike itself is a licensed bike or not, that control is also not there. So all those controls are not there. So without those controls, without having any controls in place, whatever inherent risk is there, that risk will remain there. In case of audit, the industry in which we are auditing, in that industry, if a risk is there, and say for example a company which deals in softwares and it exports its softwares to other countries of the world, so definitely the company will have a significant forex exposure. So say for example there is a lot of turbulence. Very recently you would have seen that there was a lot of turbulence with respect to Ukraine war, or even after that this Iran US war. So all these things have a significant bearing on the outcome of any business which is dependent on that. So that exposure will may impact the company significantly. So that is an inherent risk, that it is somewhere dependent on the global factors. So that kind of risk is called inherent risk, which is always there. Even when there are controls, if we have to presume that there are no controls at all, in that particular aspect, and those risks subsists. So that those are inherent risks that is bound to happen, and those controls are beyond our control. We will not be able to address those risks. Those risks are beyond our control. We will not be able to address those risks. So those are inherent risk. Then secondly, we come to control risk. Control risk. So implementing control in an organization is the responsibility of the management. It's the responsibility of the management. Please understand that. So if management has robust control over its processes, then it is it is very probable that the detection risk will be lower because controls are robust there. So control risk, yes.
Roshan ji, you can start sharing your PPT also.
Yes, I'll share it. Just a minute, give me a moment. I'll just complete this inherent control and detection risk, then I'll be sharing it. Yeah.
Sure, sure.
So control risk is nothing but the controls which are there in the organization. The organization has their set of policies and procedures. I will show each one of these examples. I will show to you how an SOP look like, how a policy look like. If all those examples I will show to you practically. And the last one is detection risk. Detection risk is for the auditor, whether he will be able to identify a particular misstatement or not. That risk is called detection risk. Now let me share the PPT with you, and let us move forward with the slides. Give me a moment, please. Just a minute. Hope my screen is visible to everyone.
Yes, yes. It's
Okay.
visible.
Yes. Thank you. So today what I will be doing, friends, that I will be sharing my experience of the past 20 years with you. That's what I am going to do. We will not talk, we will definitely, theory is the foundation for practicals, so that we need to understand. So theoretical concepts we need to understand, but we will try to link it with practicals, how it happens practically, that we will see. As I discussed, what we mean by audit risk. Audit risk is that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. This we have already discussed. Now I was discussing this inherent risk, control risk, and detection risk. So a combination of these risks, higher the inherent risk, higher the control risk, our we will have to our detection risk will be higher, and we will have to bring it to acceptably low level to manage the risk. Where inherent risks are lower, control risks are lower, so detection risk will always be lower. There we can rely on the controls of the organization. Inherent risk, definitely that is beyond the control of the management also, and beyond the control of us also. So there we will not be able to do much. But definitely when it comes to controls, management may have robust controls or they may not have robust controls. So both the possibilities are there. And detection risk is for us. Our audit procedures will define that whether we are able to manage our detection risk or not. If our audit procedures are robust enough, then we will be able to keep our detection risk at minimum. 100% 100% mitigation of detection risk is not possible, because we do not do 100% of testing of samples. We resort to sampling methodologies. So that is why detection risk will always be there. But definitely, depending on the inherent risk and the control risk, the degree of those risks, we will have to decide that what kind of detection risk we are looking at, and accordingly we have to devise our audit procedures. Take few examples, take few practical examples what we mean by these audit risks. The first example is inventory risk of inventory overvaluation. Say for example, there is certain inventory in an organization which is obsolete or which is slow moving. and we have conducted the physical verification, or maybe internally the management has conducted the physical verification, but they could not identify those obsolete or slow moving items. Even in case where we have done physical verification as statutory auditors, then also we could not identify any such obsolete or slow moving items. So what will happen? There will be a risk of inventory overvaluation, because whatever value a particular inventory is reflecting in the financial statements, that may not hold that value. The value of that inventory may be lower than what is reflecting in books of accounts. So there is a risk that inventory may be overvalued. Similarly, take another example, related party transactions. So we all may be aware that related party transactions are prone to fraud risk factors at management level also. How does it happen? If a particular party is a related party to me, then there is a possibility that I can I can make an arrangement with the related party based on my whims and wishes. That I will sell you certain products at lower than the price what I'm charging with other customers. Or maybe you can sell me certain products at higher price than what you are selling to your customers, your other customers. So there is a significant risk which is involved whenever it comes to related party transactions. So this also we need to see, and the degree of that risk needs to be seen. Say for example, a company is having 60% of its transaction with its related parties, and there is another situation that they are having only 2% of their operations with related parties. So definitely the degree of risk in related party transactions, where 60% of related party transactions are there in the entity, so definitely the risk will be much higher, and that will anyways, related party transactions are considered as significant risk area. So there we need to have a very focused approach when we are trying to manage our detection risk levels. Similarly, the third example which is given here is fraudulent expense claims. So there may be a possibility that our people who are claiming reimbursements from the organization, they are falsifying their documents, they are duplicating their documents and claiming excess reimbursements. So those fraudulent expense claims is also a risk. Especially on the sales side, a company is paying significant reimbursement to their sales staff, their field staff. So there is a high risk that there may be fraudulent practices which are exercised across. Why it may be a significant figure also? The reason being because there will be several sales field staff who are claiming this, and there may be a practice and culture of claiming excess reimbursements. Similarly, another example which is given here is revenue overstated. So maybe at the year end, the company wanted to show higher revenues. Maybe they had pressure to show higher revenues from the banker side or from the investor side. So at year end, they have jacked up their revenues by recognizing revenues which belong to the subsequent year, but we are recognizing it in the current year itself. So that is a cutoff risk. So that could also be a significant risk. Then again, provision for doubtful debts understated. So this is also a significant risk, that whatever debtors balance is reflecting in financial statements, whether that is recoverable or not. If any doubtful debtors are there, whether adequate provision has been made corresponding to it or not. So those things, these are just few examples. There may be thousands of such risks. What happens in every organization? There are certain key processes. One key process may be procurement to payment. That could be one key process. There may be order to collection, from sales order to sell to collection. So that the whole cycle is also a key process. There may be a process hire to retire. We hire people until they retire. The whole process may be termed as a key process too. So similarly, in every organization, there are key processes, 8 to 9 key processes. So those key processes needs to be understood thoroughly by the auditor to identify what all risks are there in each activity. So I will show you how it is done practically too. Just hold on. Now, when we talk about, now we have understood what we mean by audit risk. If you have any doubts, you can definitely post your queries in the chat box. Karuna ji will be able to raise those queries for you. So now we have understood what do we mean by risk. Now we are coming to risk assessment. What do we mean by risk assessment? So basically, risk assessment means that we are systematically doing audit procedures for identification and evaluation of risk of material misstatements. What process we are following? With these risks may arise, maybe due to error also, maybe due to fraud also, and accordingly we need to identify, we need to plan the procedures which we are going to perform to manage those risks. If we talk about a tailored process, how does it look like? First, we need to have a robust understanding of the entity and its environment. When we talk about entity, so we are talking about the entity in which we are auditing, and we are talking about the environment also includes the industry, the business domain. It also includes the control environment which is there in the organization. Then we need to identify the inherent risks which are involved in this particular entity and industry. There may be certain risks which are at industry level, so which are common for all the entities which are there in that industry. And there may be some inherent risks which are there for the entity also. Take an example. I just give an example that IT companies which are dependent on foreign customers, forex, so they always have that risk, inherent risk of forex fluctuations. So that is an inherent risk at industry level. Every such player will be facing that risk. But when we talk about entity level risk, maybe an entity is selling most of its products or services to its related party. So that again is an inherent risk that they are having their major business with their related parties. So that is again an inherent risk. So corresponding to that, the entity will have to devise processes, to devise controls which should be able to manage that risk. Then that will be addressed as part of the control risks. Now, once we have identified the inherent risk, then we will move to identify the control risks. So we will try to assess how robust the controls are in the organization, whether the controls are adequate enough to address all the risks which we have identified, all the risks which are there, which we have identified based on the understanding of the entity, and
Yeah.
accordingly. Hello.
Roshanji, we have received one query from Anil Kumar Purti.
Yes.
He is
Yes.
asking, sir, will AI consider and cumulate all these risks and may make the audit easy?
Okay. Yes, that's a very good question, very pertinent at in this time actually. I'm telling you, so we as a firm too, and even any other audit firm, even large firms or even mid-sized firms, everyone is using AI big time. So whatever jobs, low end jobs are there, low end jobs definitely can be done through AI itself. There are robotic process automation is there, there is AI too. So through that, definitely it helps significantly to do this job. But when it comes to our judgment, when it comes to application of our mind, so AI may not help us on that as of now, because the kind of understanding we do have of the entity. Say, for example, we are auditing a private limited company. So, not much data of that private limited company will be there on the public domain. So, AI will not be able to identify. Maybe at industry level, it can help us to identify the risks. But at entity level, we will have to get into the understanding of the entity mode to get more inputs so that we can identify additional risks. So definitely AI is going to help us help the auditor significantly. We are using it, every other firm is using it, but still lot of involvement of auditor is required. His application of mind, his application of judgment is very much required even today, and it will go on for future as well. Hope I have been able to address your query. Now, once we have identified the control risk, then we move to framing our audit procedures. So whatever inherent risk we have identified, whatever control risk we have identified, we have to keep our detection risk at acceptably low level. So accordingly, we need to devise our audit procedures. What are those audit procedures? We will discuss going forward. Now, take one example. So I have included few practical examples here, and I will show you practically how the format look like. How do we do a risk register? How does it look like? How do we do design and implementation testing of controls? How do we do operating effectiveness testing of controls? All those things we will cover. We will show to you practically. Just have patience. Now, take this example of revenue recognition. Revenue recognition is always considered as a significant risk because this is something which every investor looks at, that how the revenues of the company is growing. So there we have identified a risk of overstatement of revenue. It's not necessary that only there will be a overstatement risk. There may be an understatement risk too. So when we talk about misstatement, it is on both sides. There is a risk of understatement also, and there is a risk of overstatement too. Now, what reason the auditor has identified? He has identified that pressure to show higher profits. Say, for example, this particular entity is a listed entity, and in their last management commentary, in the last quarter, the management had committed to the investors that they will be having very good numbers in the next quarter. They are expecting that very good numbers they will be able to achieve in the next quarter. So definitely there is an immense pressure on the management to show higher profits. So that is something which may which may force management to take certain actions of overstating revenues. Similarly, year-end cutoff manipulation. Sometime back, I discussed that subsequent year revenues are being recognized in the current year, so that year-end cutoff manipulation also can happen. So what is this? Risk type is inherent risk, which is high. So pressure to show higher profits, year-end cutoff manipulation. Due to that pressure, this becomes an inherent risk in the view of the auditor. So this is an example of how an inherent risk look like. Similarly, if you refer to inventory valuation, so what is the risk which has been identified? Inventory is overstated. The auditor identified a risk that inventory may be overstated. What are the reasons behind it? He has the indication that there may be obsolete or slow moving items. And the valuation has been done based on certain estimations. So estimations can be fiddled with. So he has identified that risk. So what is this risk? Here, definitely inherent risk is there, that there may be certain inventory which may be obsolete. But there again may be a control risk, that management is not able to identify that obsolete or slow moving items, and the estimates which are involved in valuation, those have not been reviewed to the extent those should have been reviewed. So this is an example of how we categorize certain risk as an inherent risk, and how we do it, how we consider it as a control risk. And again, if you see here high and medium, so here we are classifying the risk as well, that whether it is a high level risk or a medium level risk or a low level risk. So that also needs to be seen. Now, I'm asking you this question. Just go through this, is small case study, very small FAQ, you may consider it. Just read through it, and tell me whether the answer will be false or true. First case says the auditor's assessment of detection risk should always be higher when financial statements are subject to significant inherent risks, as high detection risk is a necessary response to high inherent risk in the audit approach. What does it say? To make it simple, that in the entity, inherent risk is high, right? Inherent risk is high. So what it is saying, that the auditor's assessment of data should always be higher when financial statements are subject to significant inherent risk, as higher attention is necessary response to higher inherent risk. So what does it say? If inherent risk is higher, whether we will be able to consider that we can devise our audit procedures in a way that detection risk is also higher. So this statement is true or false? Tell me, give me the answer. Similarly, there is one more query. So for both, you can respond whether it is true or false.
There might be some time gap because they will
Okay.
write and it will reach to us
Okay, no problem.
maybe 1 or 2 minutes gap.
Okay. So no problem. So let me explain the concept. What does it say? The first question here, basically what this particular statement says is not right. The answer will be false. Why? Because when inherent risks are higher, then the auditor need to keep detection risk at the lowest level. So accordingly, he will have to keep the detection risk at acceptably low level. Since he cannot be, since inherent risks are higher, so auditor has to devise more focused audit procedures. He will have to resort to higher sampling size to address that risk. So the statement which is made here is not right. The answer will be false. Similarly, second one, if the inherent risk and control risk are both assessed as low, what does it mean? It means that the industry is not prone to significant inherent risk, and the control risks are also managed well by the entity. Their controls are robust. The auditor can still face a high detection risk. It is saying that the auditor will still face a high detection risk. Again, this statement is not right, because if inherent risk and control risk are assessed as low, the auditor will have a low detection risk. So he can resort to a smaller sampling size. He may resort to less focused audit procedures than what he will be doing, what he should do in the first example. So again, this statement too is false. So the same is given here. You can go through it. This presentation has already been shared with you. You can go through the response in detail. If you have any queries, you can ask. Yeah. So moving forward, what do we mean by internal controls? So internal controls are nothing but these. They are the processes, they are the policies, and they are the procedures designed to provide reasonable assurance that an organization's objectives are achieved. So every organization has their mission, every organization has their vision.
One
So to
student has
achieve,
written that my first answer was wrong. I hope, Kuldeep, now your answer is correct because Roshan sir has already explained you in detail. So still, if you have any doubt, you can definitely
yes,
ask.
yes,
Yeah.
yes, yes,
Till the time we are moving ahead. Yes, sir.
yeah, yeah. So what happens? Organization, every organization has an objective. They have their vision statement, they have their mission statement. They want to, maybe certain organization wants to achieve the top 10 position in their region. So when they have those objectives, so to achieve those objectives, they have to create various policies and procedures to manage the risks which are involved in a business. All those business risks they have to manage through controls, and those controls are communicated through policies and procedures. So a typical example of that is an standard operating procedure. I will show one example to you. Just wait for 2 minutes. I will show an example how a SOP look like. And what are the objectives of internal controls? As I said, reliability. They want to enhance the reliability of financial reporting. They want to enhance the efficiency and effectiveness of operations. They want to comply with laws and regulations, and they want to safeguard their assets. And they also want to prevent and detect any errors or fraud which have happened in the organization. So these are the primary objectives of internal control function in any organization. If we talk about the components of internal controls, what does it include? The first is the control environment. What is the tone at the top? Whether management is serious about the controls, whether they have framed adequate policies and procedures in the organization to drive their processes, to have those controls in place. So that indicates how the control environment is. And it is, since you know that the culture cascades down from the management itself, so they create that culture. If they have a culture of controls, exercising controls, they have a culture of going by the rules, so definitely people will also be forced to uh, comply with those rules. So it all depends on what is the tone at the top. Again, the next component which is very important is risk assessment. This we have already discussed, that what do we mean by risk assessment. Now, control activities, this again we have discussed just in the previous slide, that it talks about the policies and procedures which have been devised by the management to ensure that all risks have been addressed, all the business risks have been addressed. Information systems, so in these days someone talked about AI. So we all know that we are in an era where technology is playing a pivotal role. Without technology it is not possible for any organization to run. And when we are using technology, so definitely there are associated risks too. There may be access control level risk, there may be security breach risk, so there will be a lot of risk. So information system is a significant component of any internal control function. So this also we need to understand. And then finally, what is required from the management end is monitoring of controls. So definitely an organization can devise controls, it can implement controls, but ensuring that the control have been implemented in the right spirit, people are actually following it, so that needs to be done through monitoring. And that monitoring can happen, maybe an organization can have an internal control, internal audit function. They can outsource it to some other organization to conduct internal audit for them. So through those procedures they do monitoring of controls. They may be having enterprise risk management framework in place through which they are monitoring controls. So all these are part and parcel of how controls are monitored in an organization. How to evaluate internal control? Here we need to understand, this is very important. Please focus on it really seriously. That the assessing the design effectiveness of control. Say, for example, take one example. There is a process in the organization of preparing and review of preparation and review of bank reconciliation statement. There is a process. Now, there might be a possibility that they have devised this process that yes, bank reconciliation will be done by Mr. A and it will be reviewed by Mr. B, who is his senior, and it will be signed off. So this is the design of the control which has been devised by the management to ensure that bank reconciliation statements are prepared timely and accurately, and those are reviewed by the concerned authority. So for that they have made that process. But whether that process itself is implemented in the right spirit in the organization or not, actually whether BRS is being prepared or not at the first place, maybe the requirement is to prepare BRS on a monthly basis, but they are preparing it on an annual basis, which is creating a lot of suspense accounts, suspense items. Maybe BRS is being prepared on a monthly basis, but there is no one who is reviewing it. Maybe the organization has a process that someone is preparing a BRS, but they have not devised any process of review on that. Then what does it mean that there is no maker checker control? That means that design of the control itself is defective. If the design of a control is defective, is there any point for the auditor to get into it and to assess whether it is effective or not. That is not required. The operating effectiveness of a defective control is not required at all because its design itself is faulty. Why to get into the into testing the operating effectiveness of it when it is not feasible only? So this we mean by design, that design of a control which has been devised by the management, and whether that design is effective or not, whether maker checker controls are there or not, whether it is avoiding the conflict of duty, whether proper segregation of duty is there or not. So all those aspects are taken care of as part of design assessment and its effectiveness testing. Then based on our design assessment, design of controls assessment, and effectiveness testing of controls, then we come out with control deficiencies which are there in the system. What are the weaknesses in the controls which subsist in the organization across their key processes, whether it relates to procurement to payment or whether it relates to order to collection. So in all those processes, we identify the control deficiencies to assess the level of control robustness in the organization. Because accordingly, we will have to devise our substantive procedures as part of mitigating our detection risk. Based on this, after the second step of identifying the control deficiencies, we move to evaluate operating effectiveness of controls. Then whether if a controls design is good, if that is implemented, then we go on to check whether it is operating effectively throughout the year or not, throughout the period of audit or not. So that operating effectiveness testing is done. So this is the way through which we evaluate internal controls. Now I'll come to the practical part of it. Now let me share another document which I have prepared for you. Just hold on. Just hold on. Allow me a moment. Hope everyone is able to see the Excel sheet.
Yes, yes.
Okay.
Uh,
Thank you.
we need to go up, I think. We're just able to see the names of the file, like worksheets.
Yeah, the first
Entity
file,
understanding
are we
macro.
able to see entity understanding macro tab?
Yeah.
Yeah, so I'm opening this document. There is a Word document which is embedded in it. So that I'll be discussing. So the first step, sometime back we discussed about the understanding of the entity. So there are two parts to it. One is macro level understanding of an entity, and the second part is the detailed understanding of the processes. Now let's see how a macro understanding of an entity, what kind of questions we have to address. Practically what we do. Let me just open this document and share it with you. 1 minute. What document is not visible now? Okay.
Pardon?
What document is visible now? What document?
It's, yeah, AML Limited company
Yes,
profile.
yes,
This
yes.
file is.
So
Can
this
we
just,
zoom in?
yes, 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 I'll do it.
No, it's,
Now it's okay?
we can have 135. It's pop up. Okay.
Okay, na? Yeah. So this is just a symbolic document which I am showing to you. It relates to AML Limited, which is a listed public company. Just see that it was incorporated in 2011 and the company is dealing in steel, power and various other value added steel products. So about that company, where it has its plant, where it has its factory and other operations. So that aspect has been covered here as part of our understanding. Then next, their production plant is in Rourkela. They are listed in Bombay Stock Exchange and NSC. So all these aspects have been covered here. And There is one additional input that in the year 2013-14, the company had proposed a scheme of amalgamation. So they had undergone one some merger and amalgamation activity in 13-14. In 14-15, there was a corporate debt restructuring. So this is all part of the understanding. So what we do, this particular example is of 2015-16. Say for example, if we take an example of 25-26, then we will have to see what are the major developments which have happened in the past year. So past year developments we need to understand. Then board of directors. Board of director, who are the board of directors in the company? So their names will come. Then who are the key managerial personnel in the organization? Who is the managing director? Who is the company secretary? Who is the CFO? Who is the CEO? All those names will be captured here. Then what? How are the entity level controls? How is the tone at the top? Whether they are serious about uh, implementing controls in the organization or not, how serious they are about safeguarding of their assets, so how robust their policies are, what kind of code of ethics and all are there in the organization, what SOPs are there in place. So all those aspects are covered under entity level controls. Then what are the committees which are there to oversee the affairs of the company? Say there may be an audit committee. Who are the independent directors in that? Stakeholder relationship committee, nomination committee. So all these committees are formed based on the requirement of Companies Act, and also since it is a listed entity, so requirements of even SEBI will have to be complied with. So SEBI also says that few committees have to be there in the organization if a company is a listed company. Then what are the codes and policies which are there in place? What are the SOPs? What are the policies which are there in place, like risk management policy, whistleblower policy? If any fraud has happened and if someone has come across it and he has the input that some a person in the organization is committing fraud, so how he can blow the whistle? So that policy, prohibition of insider trading policy. So or there are a lot of policies which are required to be maintained at an organizational level. So from an auditor's understanding perspective, we need to understand what all policies are there in the organization. Then what are the manuals, other manuals, operational manuals which are there, operational policies which are there, like environment, water and wastewater management system, disaster management plan. All these aspects will have to be covered. We need to understand in detail that what all policies are have been framed in the organization and whether those policies are in compliance with the respective regulation or not. Then compliance with regulation, whether they are complying with all the above regulations or not. Then see this one, like whether they have investment policy, whether they have delegation of power manual, that who can pass the expenses of how much, whether that authority matrix is there, who can open a bank account in the organization, who can uh, who can approve availment of loan. So all those delegation of powers are there in the delegation of power manual. And most importantly, the organization chart of the organization. So what is the organization hierarchy? Who is sitting at the top? He is reported by whom? And then say for example, on the top, chairman is sitting, then managing director is there. Then below the managing director, they are CEO, chief operating officer, and chief financial officer, CFO is there, company secretary is there, all are reporting to the MD. So that hierarchy is called organization chart. Then what is there? What are the list of applicable laws, whether it be a commercial law or an operational law? So these are the list of laws which are applicable to this entity since it is in steel sector. Then the who is managing which particular compliance, who is the responsible official. Say for example, mining department is being handled by whom, planning, geology and environmental department is handled by whom. So that understanding we should have. Then compliance with regulations by contractors. What happens in these manufacturing setups? They take labor from contractors and they also outsource certain works to contractors. So whether those contractors are complying with the relevant regulations or not, because since we are the principal employers of those labor force, so we are responsible to ensure compliance with the relevant regulations. And if the contractor is, say contractor is doing PF ESI compliance for the labor he has provided to us, to the company. So we as principal employer need to ensure that whether all the compliances have been done by the contractor or not. Otherwise, it will be our responsibility. Similarly, what is the management process of safeguarding of assets, whether they have taken insurance or not, whether they are conducting periodical physical verification or not, whether they have deployed sufficient number of security personnel or not. So all these aspects are covered as part of safeguarding, how the management is safeguarding its assets. Then what is its control over information technology, because IT plays a significant role these days. So, how are the general IT controls in the organization? So, there may be certain organizations which are highly dependent on technology, and in those cases, we as auditors may not be competent enough to be able to form any opinion on the whether their information technology framework is managed adequately or not. So in that case, we can definitely seek help of the external agencies who are experts in this domain, and we can seek their report to have comfort on this as auditors. So this is just an example of how a high level understanding, macro level understanding of an entity looks like. Now I'll share.
So, one query from the student.
Yes,
Just a second.
yes.
He's asking, some management might outsource some expert level action or works. Will internal controls goes out of management hands in this kind of situation, sir?
Okay. So see, I should say that this is a wonderful question. Basically, in this era, a lot of services are outsourced to service agencies. Different service agencies are there. Like for example, for many multinational companies, Genpact or Capgemini, those kind of organizations are managing their accounts function and compliance function. Those are being managed by those agencies. Even big fours do that. So in those cases, as auditor, since that particular activity is not being undertaken by the management, so how we will ensure that whether the service organization to which that particular activity has been outsourced, whether they are applying all the necessary controls to generate that data or not, how to have that control on that. So in those cases, there is a separate standard also. Auditing standard is there for or how what we need to do for auditing service organizations where certain activities have been outsourced to service organizations. There, so when a very important activity, very critical activity has been outsourced to a service organization, so we need to understand from the management how they are ensuring that the controls which are being exercised by the service organization, whether those controls are adequate or not. So definitely the company which has outsourced its activity to another organization, they will be somehow managing that risk, that they are having all the necessary controls in place. So nowadays there is a concept of SOC 1 and SOC 2, where service organization controls are being vetted by another organization and they issue certificates to us that the controls which are there in the service organization are robust. So we can seek those certificates from the management as well. And what activities management is doing to manage those risks that service organization may not have adequate controls. So those activities we need to understand how you are monitoring that. So we will review those monitoring activities, whether it is being done adequately or not. So there are two legs to it. One is we will inquire from the management that what all activities you are doing to manage that risk, and whether that those activities are being done effectively or not. First aspect. And the second aspect is, if at all it is a very significant activity which has been outsourced, we can even seek SOC 1 certification and SOC 2 certification to from the management, that they should be providing us that certificate from that organization. So in while availing that certificate, what they do, they get their operations audited by another auditor who do the SOC audit, and they issue a report on that organization, which report can act as a comfort letter for us, that okay, all the controls which are required in that organization are being complied with. So hope I am able to resolve your query. Now coming back,
He's
yes,
he's writing
yeah.
that the management will give lot many authentication to lots of employers. How will auditor tackle each of this person? It is very highly complex task for auditor to look into each and every authentication. Right.
See, this is again a very, very pertinent question. What happens? Audit audit is something where the auditors are not bloodhounds, they are watchdogs. First, we need to understand that. When we issue our opinion, we say we give a true and fair opinion. We do not give true and correct opinion, right? In our audit report, we do mention that we have resorted to sampling methodologies. We have not tested 100% of population, right? So, and sometime back we discussed about what kind of controls the organization has to manage the risks. The first aspect is whether the management, the company has the process of identifying risk at the first place or not. First of all, they should be able to identify the risks. The management has identified risks or not. And if they have identified those risks, how they are managing those risks. So we are getting a comfort on their control systems, how they are managing their risks. So, and over and above that, we are doing our audit procedures. We are devising our audit procedures based on what is our comfort level on their controls and what inherent risk we have been able to identify. Based on that, we are deciding our audit procedures. And when we do our audit procedures, when we assess the risk, we also classify which particular risk is a high risk and which is a low risk. When we assess something as a high risk, there we have to be very focused even in our audit procedures as well. We need to ensure from our end that the controls, the surrounding controls are robust enough, and our audit procedures which we are doing is sufficient to cover that risk. So to the extent we are able to make an opinion, we are not making any conclusion here, mind it. We have to make an opinion on the financial statements, right? Whether the affairs are true and fair or not. So if you combine everything, you will get your answer that what basically is required to be done by the auditor. Okay,
So I hope,
coming.
Anil, you got answer of both of your questions, and keep on asking your doubts and question. That will
Yes, yes, that
definitely
will
help
make
your
the session interactive. Yes, yes,
doubt
yes.
to be resolved. And now, Roshan sir, we should move
Okay, okay,
forward to our topic. Yeah.
yes. So next I'll just show. Now we will run through really fast because we have a lot of things to cover. So this is again, I'll just zoom in. You'll be able to see it then properly. So this is
Small
just
things, students, just like sir shown that Word document wherein he shown you the details of laws applicable to that entity. I hope when you are reading that part, you are able to correlate it with SA 250 or whichever part we are going towards. You should try to interlink it with the relevant standard also. That how it is guided and why it is appearing in that file list of all the laws and regulation which are applicable to that entity, right?
yeah,
So
yeah.
whenever sir is sharing with you his practical experience with the help of these files also, and you also try to put in your efforts that you are correlating it with the what you are studying with the help of books, engagement and quality control standards on auditing, right? Over to you, sir.
Yes, thank you. Yeah. So now the next part is the accounting health checklist, how we do entity understanding at detailed level. So definitely I'm not covering here the process level review yet. In process level, for key processes, we need to have a very, very uh, significant understanding work. But here, this is a preliminary understanding of the accounting health of the company, how the company is accounting. Say there are general questions like which accounting software they are using, Are there any whether backdated entries have been enabled or not, whether accounting manual is in place or not, are there any operational and financial SOPs there or not, what is the frequency of book closure. So likewise there are many other questions which we need to ask from the whether they have a MIS system in place or not, management information system through which management is managing their affairs, the people are reporting to them, the management reporting pack I mean. Then whether they have budgeting system or not, how they are tracking budget with actuals. So all these understanding is very much required for us to understand their process. Now procurement including inventory management, similarly a lot of questions are there as well. Now human resource department, so for each function we need to understand, we need to have understanding through these queries, through these inquiries to the management and the concerned process owners. We need to understand how the company is operating now. Fixed assets are there, then current assets and liabilities are there, then stat compliances are there, and certain miscellaneous items like whether any byproduct or scrap is generated at the time of manufacturing of raw material, how they dispose of their byproduct or scrap, right? So these are the questions which we need to ask to the company, to the management, to the process owners, to have a robust understanding of their process. Now I'll show you one another document. See, so this is
Prior
this is
to
a
that, one more query from the student.
yes,
He's
yes,
saying if auditor needs to cross-check and audit if CSR contribution is properly calculated as per section 135 of the Companies Act 2013.
okay,
Whether auditor need
okay,
to cross-check and audit if CSR contribution is properly calculated as per section 135 of the Companies Act 2013.
yes, definitely,
He's asking
definitely.
very basic
So
question.
wherever CSR is applicable, so definitely we will have to check CSR contribution, because we are also reporting on the compliances. What happens if you refer to the audit report, there are three parts to it. Definitely in the foregoing session you will be covering it. That there are three parts to it. One part is the main audit report. The other part is the report on internal financial controls over financial reporting, and the last part is CARO, a company's auditor's report order. So there are a lot of aspects which are covered in CARO also, where we need to report on each aspect. So CSR is also covered there, so we need to comply with that as well. We need to see whether CSR compliance has been done or not. So since Companies Act is something which is the foundation of any audit, because that is the act which is uh, making us eligible to be auditors of any company. So definitely that law has to be taken care of. Now, so if you see, this is just an example that how an
So
organization
can we make it
hierarchy
full
organization.
screen?
Yeah. So actually this is full thing will not be visible then.
No. From upper side, full screen.
Okay, just a minute, just a minute.
Yeah.
Now it's better.
No.
Yeah,
We can have it smaller only. Yeah.
yeah. So this is just an example of how an organization chart look like. If you see, on top sits the MD, Mr. Agarwal, and there are other heads under him who are reporting to him, like Mr. Banerjee, Mr. Das, Mr. Saha, with who is marketing, sales and strategies head, Mr. Day, Mr. Manna, Mr. Chaudhary. So there are a lot of people who are reporting to him, and under them again there are other people who are reporting to those people. So what happens, this creates a pyramid in the organization. It looks like a pyramid. So any organization, the pyramid generally is bottom heavy, and at top there are few people who are managing the whole show. So this is an example of how an organization look like. Why it is required to be understood by the auditor? Because we need to understand who is doing what, who is managing which function, who is leading which function, who is reporting to whom. So that understanding we need to have, because when we look into, say for example, an expense approval, then we will get to know that who should have that right, who should have that authority to approve that expense. So that understanding we gather through understanding of the organization chart. So this is just one typical example how it looks like. Then coming to the next sheet, so this is a typical risk control matrix. What does it mean? It covers the risks also, and it covers the corresponding mitigating controls also. So this particular RCM, risk control matrix, is for entity level controls. What is the tone at the top that we are trying to assess through this risk and control matrix, which belongs to entity level controls? If you refer to its first column, all the RCMs looks like similar. So if you, maybe one additional column may be there, if you find it useful, then you can include one more column. This format is not a sacrosanct format. It can be customized based on an auditor's judgment. If he wants to include something else also, he can include, but typically this is a general format which is used for compiling a risk control matrix. If you refer to this particular ELC, the first column reads risk number. So what happens in entity level control? The organization has identified a set of risks. Say for example, they have identified a uh, total of 9 risks. The organization has identified a total of 9 risks at entity level. So what they have done, they have codified this risk as risk numbers. So R refers to risk, ELC refers to that it belongs to ELC cycle, and 01 refers to the first risk. Similarly, till 9, 1 to 9 risk will be codified as 01, 02, 03, and till 09 it will go on. So this is risk numbering. Why do we number risk? The reason is we have to number risk to ensure that we can, for ease of access, for ease of management, that a particular risk which is descriptive in nature, that can be identified by just one code. It makes the things really easier. Then the next column reads risk description. Just read through the first example which is given here. Lack of participation by the management and people charged with governance. So what is the risk here? Maybe the management is not doing its job. The people who are charged with governance are not doing their job. Then what will happen? This is definitely an important risk. Whether this risk of material misstatement is due to fraud? No, a fraud angle is not involved in this. And maybe in certain cases, if intentionally management is not overseeing the functions, if you see that there is a fraud risk factor, then we will have to consider here yes and not no. In this particular case, the auditor has identified it as there is no risk of material misstatement due to fraud. Whether control exists, yes. Then again, what is the control corresponding or mitigating this risk? This control also has been codified in line with the risk. If you see, this risk read RELC01, but the corresponding control is CELC01. So we can easily be able to identify that which risk is corresponded by which control. So if we are using this code, this is the benefit. Now, description of control. Just read through this one control. The company has formed various committees to oversee and exercise high-level controls and to actively participate in critical policy decisions. So what it is saying is they have formed various committees through which they are overseeing the operations of the company, overseeing the functions of the company. So through that means they are controlling this activity, that there will not be any lack of participation by the management. Through this control, they are ensuring that. Now, is there any control supplement or additional control for this? So here it is not applicable. Then what is the control type? It is a manual control because meetings will have to be done physically. And whether it is a preventive control or a detective control, it is a preventive control also, it is a detective control also. Why preventive control? During these committee meetings, they may come up with certain policies and procedures which will prevent mishappenings. And at the same time, if anything wrong has happened in the organization through these meetings, when they are meeting the functional heads, when they are meeting the management people, they will be able to identify those defects. So this control is also a detective control too. So this is very important to understand and classify that a control is a detective control or a corrective control or a preventive control. And we should always endeavor as auditors to recommend any controls which can make a detective control a preventive control. So definitely at the highest level of controls is the preventive control, because that is stopping something to happen. So definitely an organization would like to have controls which can prevent misdoings, right? So this is a typical example of how a risk control matrix look like. Now we are again going back to the presentation to cover rest of the aspects. Just allow me a moment. If any questions are there, you can just raise the questions. 1 minute. Just a minute. Yeah, coming back to the presentation now. So as some time back, Karuna ji also discussed that this particular risk assessment, which we are discussing now in internal control evaluation, this is covered by SA 315, 320. So basically 300 series covers these aspects. So I'm not getting into the numbers. I'm getting into the concepts now. So see, what is the standard of auditing which has been issued by ICAI? What is its role? Its role is to educate us on how risk identification and mitigation process happens, how internal control evaluation is done, what are the governance and compliance requirements which we need to understand, and which can definitely help us make informed decisions. So SA's role in ensuring effective risk assessment and internal control evaluation through this standard is this. Now we will just cover very briefly the standards, because I will spend more time on covering the practical aspects rather than spending time on the standards, because you yourself can read through the standards. So here SA 315, which deals with identifying and assessing the risk of material misstatement through understanding of its entity and its environment. So we need to understand the relevant industry, its regulation, applicable regulations. We discussed this. We also need to understand what are the external factors which are affecting the entity, and are there any fraud risk factors or not. We need to understand the nature of the entity, what business it is doing. We need to understand the how the entity has selected and applied its accounting policies. What are the policies and procedures in place which have been framed by the management? If any changes have come in those policies and procedures, what is the rationale behind those changes? That also we need to understand. We need to understand the entity's objectives and its strategies, how they are managing their risks. And we also need to measure and review how the entity has performed financially. How is the financial position of the entity? We also need to understand its operations. We need to understand its ownership and governance structures, how they are governing the whole show, what kind of investments it has. Maybe it has investment in certain subsidiaries or joint ventures or associates, so that may require its consolidation also. So that also we need to understand, and how the way entity is structured and how it is financed, how debt driven it is. Maybe the debt equity composition is very skewed. That we need to understand, and accordingly we need to devise our uh, we need to identify the inherent risk in the entity. So this is one aspect which is covered by SA 315. It also covers that how, due to fraud, certain risk of material misstatement may happen, and how do we identify those, and how do we assess those. So this we have already discussed, that there are inherent risk, control risk, and detection risk. Wherever there is a fraud risk factor which we anticipate in any risk of material misstatement, so in that case it will always be considered as a significant risk, and a focus testing will be required. So this we need to understand. Wherever we foresee any fraud risk factor in any aspect, sometime back we discussed about related party transactions. So in case of related party transactions, it is always, there is a high probability of fraud, management level fraud. So that will always be considered as a significant risk. How we respond to the risks which have been identified: whenever we come across any fraud which has not been reported by the management to us, we will definitely have to immediately discuss it with the management and those charged with governance. Whenever we come across any such fraud, and if any fraud has been reported to us by the management, that also we will have to take to the TCWG for their information when we report to them, in through audit committee or through other reporting mechanism. Now there is one case study which you need to solve. Let me just run you through this case study very fast. The company is having strong internal controls in place for cash handling and inventory management. So their cash handling operations and inventory management is very robust. The surrounding internal controls are robust in case of ABC Corp, which is a medium-sized manufacturing company. But the auditor has come across weaknesses in their account payable processes, where no segregation of duties exist between those responsible for processing payments and those approving them. What does it mean? That invoice has been booked after approval of certain person or certain department. The invoice has been booked after the approval, and the payment also is being processed by the same department or the same person. So definitely there is a conflict of duty. If that person wants to commit fraud, he is in a very good position to commit the fraud in this case. So in this case, now the question to you is, based on the case study, which of the following is the most likely reason for the increased audit testing in the accounts payable process? What is the most likely reason? So there are four reasons given there. The first one is the strong internal controls in cash handling. It does not relate to this particular risk, so this definitely cannot be the answer. The auditor's reliance on the internal controls of ABC Corp in the accounts payable process. So the reliance level of the auditor on the internal controls of ABC process with respect to accounts payable process. And the third aspect which it is saying is the lack of segregation of duties in the accounts payable process. And the last one is the need for reducing the risk of issuing an inappropriate audit opinion. So from this, it is very clear, it is amply clear that since there was lack of segregation of duties, which is a significant risk which has been identified by the auditor in the accounts payable process, is the reason why the auditor has increased the extent of his substantive testing in the accounts payable section. So it is very clear. Hope you have understood this case study. Since it will take time for me to get your responses, I'm covering it myself, else I would have loved to get responses from your end. So whatever I said, you can go through the response in detail when you go through this presentation again. Now coming to SA 320, materiality. So hope each one of us here must have heard of materiality. So this is something which creates the foundation of any audit. Unless and until we have identified the materiality level, this is the tolerance limit beyond which we will have to modify our report. How does we compute it, and what exactly is it? What happens if any material misstatements are there in the financial statements, then that can impact the decisions of, or that can influence the decisions of the users of the financial statements, whether it be shareholders or the lenders or the creditors, whoever. So anything which can influence the economic decisions of the users of the financial statement is material. And it is not only limited to a quantified amount. It does not restrict itself, materiality does not restrict itself to quantification of an amount. There may be a non-disclosure of something which may be material. There may be a incomplete disclosure or inadequate disclosure of something which may be material, which can be termed as a material misstatement. But since the financial statements are presented in figurative terms, and somewhere we need to have a quantified threshold for our materiality to understand that what is important and what is not that important. To bifurcate between the two, we calculate the materiality. How do we compute it? First of all, we need to identify the most appropriate benchmark from the financial statements of a company. Now, what do we mean by benchmark? What do we mean by it? Benchmark refers to either it can be profit before tax, it can be revenue, it can be profit, it can be net assets of the company, depending on what particular aspect the investors will look into in the most focused manner, what matters to them the most, and what has been the most consistent in the organization in the past years. Say, for example, a company which is there for say 20 years and it is growing by 5%, 7% year on year. So, what is the most consistent factor in that organization? That may be either revenue or profit before taxes. So, as auditor, then we need to apply our judgment whether I should consider revenue as the benchmark or should I consider the profit before tax as the benchmark. Whichever benchmark we consider, and take one another example. This was about a running company. Take one other example where a company has started just 2 years back. It does not have a long history of revenues and profit before taxes. What other, and it has invested heavily in fixed assets. So investors are aware that the company is operating only for the past 2 years. It has not reached its potential in terms of revenue or profit before taxes. So what may matter the most to them is their investment in fixed assets. So in this particular case, we can even consider the fixed assets as the benchmark for computation of materiality. So benchmark may differ depending on the stage in which the company is and what is the perspective of the investors or the other stakeholders. What is the most important aspect in the financial statements from their perspective? So that is also one of the other deciding factor, critical factor. And ultimately, the decision lies with the auditor. He will have to apply his judgment that which benchmark will be the best to compute materiality. Now, once we have identified the benchmark, say for example, revenue has been considered as a benchmark. It is a running company and it has been performing, growing really well in past 15, 20 years. So when we have identified revenue as the benchmark, then we will have to apply a certain percentage of, say, for example, 1% or 2% at most. Generally, when we consider revenue, we consider 1 or 2%. So basically, it is not a sacrosanct figure, but predominantly auditors have been using it this way, that they consider 1% or 2% of revenue as a percentage of the benchmark. Say, for example, revenue is 100 crores of a company. So my materiality, my overall materiality will be 1%, maybe 1 crore, or 2%, maybe 2 crores of the overall. That will be my overall maturity for the organization. So that will depend on how robust the controls are in the organization as well. That is also one of the critical factors which we need to consider while deciding the maturity level, whether we have to consider 1% or we have to consider 2%. Say, for example, where we feel that detection risk will be higher, then we can consider maturity at a lower level, because as low is the maturity, that will increase your sample size, because we divide the population with the maturity to arrive at the sample size. So that is overall maturity. Now, there is a concept of performance maturity. So performance maturity is nothing but it gives you a cushion on the overall maturity. It acts as an alarm. What happens if we have to reach to airport at say 6 o'clock? We have to leave our home by 4 a.m. in the morning to reach the airport by 5 by 6. Maybe it will take 2 hours of time. Then we will have to plan to get up at say, for example, at 3:30 to get ready. But still what we do, we at least put 2 3 alarms, maybe 10%, 10 minutes before. Why do we do that? We want that cushion that even if I am not able to wake up by the first alarm, at least with the second alarm, I will be able to wake up. So what is that? We are trying to keep a cushion. So similarly, in case of maturity also, we keep a performance maturity which is computed as a percentage of the overall maturity. Say in in this present case, the example which you took, the maturity overall maturity figure is 1 crore. So depending on how robust the controls are in the organization, how is the degree of the detection risk, accordingly we will see that say we can set performance maturity as 75% or maybe 60% or maybe 50% of the overall maturity. So based on that performance maturity, our sample size will be determined, that how many samples we will be testing. Once we have derived the performance maturity, so that acts as a, so in aggregate, say for example, there may be various uncorrected misstatements across the financial statements. Say in inventory there is a misstatement of say 5 lakh rupees. In case of debtors there is a misstatement of 20 lakh rupees. In case of investment there is a misstatement of 20 lakh rupees. And if we are aggregating all these misstatements, we are arriving at a figure of say 60 lakhs, and the performance maturity which we have fixed is 50 lakhs overall, which has been computed based on overall maturity. So now it will definitely act as an alarm for me that I may need to modify the report. There is a significant risk which is there in the organization. So it may require modification of the report, because in aggregate, the misstatements are significantly higher than my maturity levels. So then accordingly, the auditor has to plan how he has to comprehend that in his audit report. So again, judgment, usage of his judgment is required. So this, whatever we discussed, it is there that the amount set by auditor at less than maturity for FS as a whole, what is performance maturity, and it is reduced to an appropriately low level. The probability that the aggregate of uncorrected and undetected misstatement exceeds maturity of the financial statements as a whole. So this is the role of performance maturity, and this is how we do it. How do we use it? Where it is used: to determine the nature, timing, and extent of risk assessment procedures, to identify the risk of material misstatements, which misstatements we will consider material. So based on what figure we have derived for materiality, so that will be considered for the purpose. This will help us determine the nature, timing, and extent of further audit procedures, the substantive audit procedures which we will be doing. And what will be the basis of maturity? Based on this, the size or the amount of the maturity is important. One, nature of information is important. Legal requirement, if any, is there, that also may play role in it. And even the qualitative aspects of the financial statements also may be material. Benchmark we have already discussed, so I'm not getting into it again. You can just go through it. Now coming to essay 300, which talks about planning and audit of financial statements. This we have already discussed at length. How do we understand entity and business? How do we identify risk areas? We have seen it for entity level controls, and I will run you through one procurement to pay process as well. Evaluate, how do we evaluate internal controls? That we have seen in example of entity level controls. Now, based on our assessment, now we have to respond to those assessed risks. How do we do that? We design our audit procedures based on the assessed risks. We test the internal controls, whether those are robust or not. We adjust our substantive procedures accordingly based on the results of the internal controls. And accordingly, we form our opinion. So, audit procedures design, testing of internal controls, and substantive testing adjustment. These three form part of auditors' responses to the assessed risks. What are the steps? The steps which anyways we have discussed, but we will just summarize it once again. The entity understanding is the first step. The second step is to understand the controls. The third step is to identify the risks. The fourth step is to design, to assess whether the design and implementation of controls is proper or not. And then we do the controls testing, which is ensuring the operating effectiveness of controls, whether those are effective throughout the year or not, those have been implemented in the right spirit or not. And then finally we do the risk assessment. Based on that, we devise our audit responses. So this, I'm skipping this. We have already discussed at length, so I'm skipping this. Yeah, so this is one important slide, that how do we identify risk of material misstatement? Through understanding of the entity and environment. This we have discussed already. Through evaluation of internal controls. Through performance of inquiries and analytical procedures. I'm sure that each one of you is aware of what do we mean by analytical procedures, where we use trend analysis, where we do ratio analysis, where we try to create plausible relations between two financial data, or one financial, one non-financial data, or two non-financial data. So we try to identify the plausible relationships between those data. Then we conduct walkthroughs, process walkthroughs, the design, understanding the design and implementation of controls. That is called walkthrough, where we verify the flow of the transactions and controls. And we also need to focus on the complex transactions. This is very important, because organizations which has done something, say some management has done something, they have various derivative instruments in which they are dealing with. So those derivative instruments, they have created a lot of layering in it to make them complex, so that the auditor also will not be able to comprehend whether it is operating effectively or not, whether the outcome of these derivatives has been adequately captured or accurately captured in the financial statements or not. So they try to make those transactions complex, like they may have subsidiaries, step down subsidiaries, and that those subsidiaries will have further JVs, and those will have associates. So they will do this layering also to make the transactions and movement of funds complex, so that auditor will not be able to comprehend what they are trying to do. So they may have those selfish ends at their end. So we need to understand what complex transactions are there in the organization before we, as part of our risk assessment process. Yes. So this also we need to understand what is ROMM, what are the types of ROMM. One is financial statement level risk, that there may be certain risks which are there at financial statement level, and there are certain risks which are at assertion level. So what happens, I'm not sure whether you are aware of the meaning of assertion or not. So let me tell you that this is nothing but, from this perspective, for this attribute, an auditor is testing a certain transaction or a balance or a disclosure. So take an example. that we are testing sundry debtors. So what, first of all, what we will do, say for example, we have received one sundry debtors aging from the client. The first and foremost aspect which we will be doing as auditors, we will check the total of the sundry debtors aging with the figure which is reflecting in the trial balance. What it will ensure? It will ensure the completeness of the data. So we are testing, we have done this exercise of tying the figure of aging with the ledger. Why we did this? To ensure the completeness, to ensure the attribute of completeness, to ensure the assertion of completeness. So that is assertion level risk, that these two figures may not tie, that completeness risk. Similarly, financial statement level risk, what it, where it can have happen, where, which is due to weak governance. The tone at the top is such that they are not very do not believe in formal internal controls. They are overriding controls. The management is overriding controls. They have framed the policies, but they themselves are breaking those rules. So those create financial statement level risk. Like I said some time back, related to related party transactions. In case of related party transactions, they can frame a methodology, they can follow a modus operandi through which they are fudging the numbers of related party transactions. So that is a financial statement level risk. So design of controls evaluation, this we have already discussed. So I'm not discussing it again. Determining implementation of control, this also we have discussed already. Assessment of control risk and overall risk, this also we discussed, that how we identify inherent risk, control risk, and accordingly we devise our detection risk. And then operating effectiveness, whether the controls which have been implemented in the organization, whether those controls are operating effectively and operating throughout the year or not. So that we do through inquiry, observation, inspection of records. We reperform, we recompute. Like for example, depreciation. Say for example, depreciation is calculated automatically by the system, but still to ensure that whether the configuration of the system itself is correct or not, we can reperform the depreciation calculation ourselves, we can recompute it and match the results of the system and what we have been able to derive. So that will give a comfort to us whether control is operating effectively or not. And based on all that assessment, we will design our further audit procedures. See, what happens in any risk scenario, there may be a situation where there are no controls at all. The management, the client does not have any corresponding control to mitigate that particular risk. There may be another situation that they have laid a policy, they have laid down a control, but that has not been implemented. The third situation may be that they have devised a policy, they have implemented the control also, but that control is not effective. That may not be adequate. And there may be a situation that control has been exercised, say 2 months out of 12 months in a year, that has been exercised in 2 months, but in the rest of 10 months, it has not been exercised. So as auditor, we need to understand that whether the control has been designed adequately, appropriately or not, whether it will be able to address the underlying risk or not, whether the control is adequate or not, whether the control has been effectively implemented or not, and whether the control is operating effectively throughout the year or not. So all these questions we need to ask when we are assessing controls, when we are assessing the risk and the corresponding controls.
So we have received one query.
Yeah.
As you stated, auditor should respond to assess risk. How
Yes.
deeply can the auditor examine, keeping in view auditor should not investigate restriction?
No, I didn't get the last leg of it. The auditor
I'm
does should.
repeating.
Yes.
As you stated, auditors should respond to assessed risk. How
Okay.
deeply can the auditor examine? Keeping in view, auditor should not investigate restriction.
Okay. Okay. Even though the last line is not very clear to me, but still I
Yeah.
have got the
Anil,
I have
if you
got the
can just elaborate what is your doubt, or if you can elaborate that so that we can also reach to root of the question, what you really want to
yes,
ask,
yes. So I did
right?
not get the question exactly. So
So
anyway,
my request to you, Anil, please elaborate your query.
let
Yeah.
him ask the question. I'll move forward. Let him ask the
Okay.
question, reframe it, and ask it. Then I'll respond to it.
Sure. Sure.
Yeah. Okay. So now, see, as I said, risk assessment is the backbone of the entire audit. So that's what is written in the first statement, that risk assessment underpins the entire audit approach. Unless and until we are able to identify risk of material misstatement, we will not be able to do justice to our audit. And audit is a journey which starts from engagement acceptance and it ends at the audit report once we have issued the audit report. So throughout this journey, at every stage, right from the acceptance level, when we accept an engagement, then also we need to do risk assessment. We need to see the management credentials, the background of the background of the company, the kind of business it is in, whether the business itself is prone to litigations, right? So all those aspects are looked into even at acceptance level. So at every stage, at planning level, at controls testing level, at risk assessment level, at every level we have to work around the risks. We have to do the risk assessment at every level. So risk is something which goes on right from the acceptance of the engagement till the end of it when we issue the audit report. So it will go hand in hand. So that is the reason why it is always said that we may create an audit plan, but audit plan is highly dynamic in nature. When we move forward, we can come across certain risks which will force us to change the audit plan. Otherwise, many of the risks will remain unaddressed. So audit plan, that is why it is considered as a dynamic thing which has to be reconsidered at every stage whether audit plan still holds good or not. Determination of materiality, this we have already discussed. So first step is risk assessment. Second step is determination of materiality. This we have already discussed. I'm not getting into it again. Then accordingly, we create audit strategy and audit plan. See, what is the difference between audit strategy and audit plan? What audit strategy does, it tells us what and why. What and why. What we want to achieve through audit and why. Who has asked us to do it and whom to report it, why we are doing it. So all those questions are addressed in the audit strategy. And when it comes to audit plan, it talks about how it is to be done, how that audit strategy has to be met, and when it has to be done. Who will be involved in doing that? So all those aspects will be covered as part of audit plan. So if you just refer to this sequence of events, the first event is we need to understand the entity, we need to assess risks, we need to determine materiality, we need to review our prior experience also. Definitely, if we are continuing auditors, then definitely our past experience will come into picture. We need to accordingly develop strategy of audit and we need to create an audit plan. So this is the cycle which we have discussed till now. We need to understand the internal controls in detail. This we have already discussed. See, some time back I talked about the business processes, the key business processes. So that is also called business cycle. So that is nothing but end-to-end flow of transactions in a particular business cycle. For example, order to cash, this is sales order to collection, the whole process, procurement to payment, inventory management, payroll. So these are the kind of business cycles which we need to first identify, that which are the most critical business cycles in an organization. And then we start understanding each business cycle to identify the risk and to assess the corresponding controls. So this is understanding a business cycle. How do we do it? So we need to understand the transaction control process, how a transaction in this business cycle is being controlled, how the transactions are authorized and approved, how the transactions are processed, how those are executed and recorded in the systems, and how it is going to the financial reporting. The whole process, right from the data capturing till the reporting, is to be captured when we understand a business cycle. The full process has to be understood. Linking business cycles with risk control metrics. So, in each business cycle, for each key business process, there will be a risk control matrix. Because in every business process, there will be risks, and wherever there are risks, there has to be controls. So risk control metrics will be there for each of the business process. So that's the reason why it is saying that we need to link the business cycle with the corresponding risk control matrices. RCM, I have already shown to you how a risk control matrix look like, and definitely I'll take you through one procurement to payment process as well. I'm left with only 15 minutes, so this theory part we will cover within 2-3 minutes more, and rest of the time we will be spending on the practicals, and also if any queries you have, we will try to address those queries. Testing of controls, this we have already discussed. So one case study is there. So this case study, if time allows, we will discuss this, or else let me take you through the procurement to payment process, one whole cycle. How does it work? So let me just take you through that first. So Anil has posted the question, ma'am. He has posted it yet?
Not.
Not yet. Okay, no problem.
Kuldeep has, in fact, asked a question.
Yes,
If
what is the
statutory
question?
auditor is responsible to check that the company has provided for adequate income tax, and in fact,
Your
Anil's
voice,
query
your
has
voice,
also been received.
ma'am, your voice was not audible to me. I could not clearly hear
Let
you.
me
Yeah,
repeat.
yeah,
First, though, I have received Anil's query. So let me
yeah.
first read that. How
Okay.
deeply the auditor can assess the risk? Will there be any limitation to the auditor while assessing the risk? Like auditor should not investigate.
Okay. So this is again a very good question. So thank you, Anil, for asking this.
And one
So,
question of Kuldeep. So after this, I will take the question
yes,
of
yes,
Kuldeep.
yes, please. So let me respond to Anil's
Yeah, yeah,
question
please.
first. Yeah. So what happens? Generally, preparation or compilation of risk control metrics, the identification of risk and implementing controls is the responsibility of the management. So ideally, risk control metrics has to be prepared by the management. They have to have that risk control metrics in place already. Say we are taking an example where management is providing us the risk control matrices of all key business processes. Now, as auditors, what is our role? Our role is to understand, based on the understanding of the entity and the processes which we have had. Based on that, we need to see that whether all the risks which comes to our mind also, based on our experience and understanding of the entity, whether those risks have been captured in the RCM by the entity or not. So our first role will be to identify any uncovered risk which has not been captured in the RCM by the management. This is the first role. Then second role is, now we have ensured the completeness of the risk. Then the next role is to see whether classification of risk has been done appropriately or not between the significant risk and other risk. Because accordingly they will have to devise their processes where more focus is required, where less focus may be sufficient to identify that. So that we need to assess that classification by the management is done appropriately or not. Then the third role which we will have, the corresponding control which has been laid down against the risk is adequate or not, whether that is addressing the risk or not. So that will be our third responsibility. Then fourth responsibility will be if these controls which have been documented here in the risk control matrix have actually been implemented by the entity or not. That we do through implementation testing. When we do design implementation testing of controls through process walkthroughs, we do that. Then post that, then our responsibility will be to identify whether to determine whether the controls which have been laid down, which have been implemented, are operating effectively or not. That operating effectiveness testing we need to do. And all these we do only on sample basis, let me tell you. So there will be always a risk that we could not detect something, we could not detect a risk, maybe we could not assess the design of the control, whether that is adequate or not. Maybe from our perspective, we were also lacking on that. There is a possibility that we thought that the control is implemented. Maybe it was implemented only in 1 month, which we tested, but in rest of the 11 months it was not there. So all these risk will be there. So that is the reason why we try to cover our detection risk through substantive procedures. Because after this control assessment, risk assessment, we still are left with lot of detection risk, which we try to cover through substantive procedures. But substantive procedures also cannot completely eradicate all the risks. There will be some audit risk which will be left over. And that is the reason why we give true and fair view. Hope now I've been able to respond to your query. Now, ma'am, one more query from Kuldeep, you said?
Yeah, so before I proceed further,
Yeah.
just one clarification or confirmation, dear students. Our 27th June session, we want to postpone to 29th June. Due to some issue, we are not able to conduct the session on 27th of June. So we want to postpone it to 29 June. Dear students, please confirm that whether it will be convenient to you. Timing will remain same, 4 to 6 p.m. Right? So, yeah. Now moving towards the query, but in the meantime, you can write in the chat to me. Yeah. So one query received from the Kuldeep is, if statutory auditor is responsible to check that the company has provided for educate income tax.
Yes, so definitely. See, when they have created income tax provision, so provision is reflecting in financial statements. And we need to check provision because it is a number which is there in the financial statements. So the basis of that computation of provision for tax, that we anyways we need to check. It will have a direct impact on the financial statements, the profit and loss account. It will have a direct impact. So definitely we will have to check that. It is a part of financial statements. Yeah. So I'll just quickly run through.
29 June, I have received only one or two reply. For other students also, I request you to please confirm that we want to postpone 27 June session to 29 June so that our whole schedule is not disturbed. Okay. So you can write to me. In the meantime, sir is continuing.
Yeah. So see, this is a typical example of maturity calculation, which I discussed, which I gave you an example of 1 crore, 1 crore, 100 crores, 1 crore, 50 lakhs. So that example, similarly, this is one example. How do we compute maturity? So this is the typical calculation, how it is done. Here you can see one trivial maturity concept is given. What does it mean? It is at transaction level. So of the performance maturity, we can calculate certain percentage, one small percentage, which we can consider at transaction level. That beyond this, if any misstatement is there, then we will consider it material, else we will not consider it material. So that is the purpose of this trivial maturity threshold. Now, audit plan. This is a typical audit plan which looks like that area of work, what work we will be doing, who will be the person in charge, preparer, what is its status as of now, by when it will be done, who is the person in charge who will be reviewing it, and finally, if any remarks is there, so that can be captured here. So this format can be further customized based on your needs and judgment. Now coming to requisition list. This is the typical requisition list which we send to client for audit. where head as per financials, what is the requirements we have, who is the person responsible from the client side who will be providing that information to us. This is done based on the inquiry with the management. What is the data receipt status, if any management remarks are there, and when we receive this data. So this is a typical format in which we send the requisition list and we track it. This is a typical format of SOP which I am sharing with you. So before I go to SOP, let's okay, let me just show it once. 1 minute. Let me just show it. So allow me 5-7 minutes more, ma'am. So I'll just cover rest of the things.
Okay. We can get max to max 5 minutes because our
Yeah, 5 minutes. 5 minutes.
yeah.
That will
Please,
be.
please, sir.
Yeah.
Please.
So this is a typical format for SOP, like, and it can be further customized, but organization to organization it may differ. It's not necessary that it will be just remain the same format. This is for purchase department. See how does it look like, the contents of it, the introduction part, why this SOP is there in place, what is the purpose of this SOP, what are the objectives it is trying to address, what is its scope, what are the policies of the company. This is the process flowchart. How does it work? How each of the transaction will move. This is in the flowchart form. This is the process timeline, that T plus 2 days this particular activity has to be done, T plus 1 day it has to be done. So this process timeline is there. Then process narrative, whatever is there in the flowchart, that has been narrated in words also. So this is the narrative of what is there in the flowchart. So this is the way a typical SOP is prepared. Now coming back to the Excel sheet. Yeah. So this is, see, the way we saw how do we understand the process. So this is source, input, process, output, and the consumer of this information. This is a typical format in which we capture our understanding. So I'll just narrate one example. Like source is stores, a user department is the source. Unapproved indent. Indent is the purchase requisition which is made by the user department that we want this item. The process is individual departments, after identifying any requirement of a material, issues an indent. So basically, individual department who wants a particular material is issuing an indent to the stores department. Then what is the output? The unapproved indent, which is being sent to the stores department. Then this particular indent will be approved by the user department head, and likewise this process will go on. And finally we reach the end of this process. So this is the way we capture our understanding part, where we capture input also, process also, output, and who is consuming this information and taking it forward. So here, whoever is the consumer, that will become a source in this case in the next line. Now coming to P2P process flow. So process flow, anyways, in the SOP I have showed you the process flow. This is again one example how it can be captured in a flowchart. How can be the process flow? So
So
you
we
can
can
just have,
maximize it.
yes,
It's
yes,
not
sure,
fully
I'll do.
visible. Yeah.
Yeah. So now hope it is visible.
Yeah. Better.
Yeah. So this is an example how we can capture our understanding in a flowchart. So this
If you
flowchart
can
is
just little
shown.
elaborate it, sir.
Okay, sure. I'll do that. So in this case, what has happened, this particular process is with respect to invoice booking. So the vendor has issued the invoice. It has sent it to the department at plant. The department, what it did, it has made an entry in the Google Sheet for all the invoices received in plant. They ensured the completeness of all the supporting documents which are were annexed with the invoice. They confirmed the invoice by putting their signature. It is sent to their HO bill desk for processing of the invoice, for payment of the invoice. Here at the HO, the bill desk, what it does, it matched it with the Google Sheet. They made the further entries in the Google Sheet for their part. They ensured the completeness of supporting once again to see whether adequate supportings are there or not. Then it is sent to the P2P department. that procurement to payment department for confirmation for additional documents if any are required, that is asked for. Then finally it moves to the accounting software where expense entry is being made. Finally, the accounting entry is done in the tally, and in case of advance payment, the process, what will be the process, that is captured here. So this is one example of that how invoice booking understanding can be captured through a flowchart. Similarly, RCM I have already shown you for ELC. Similar is the RCM, similar is the concept for procurement to pay. Here all the assertions also we are covering: completeness, existence and obligations, accuracy, valuation, rights and obligations, presentation and disclosure. So all these, which particular activity is covering which all assertions, for which all assertions I will be testing this control, that I need to identify here as auditor. So here the company, what they have done, they have also mapped the COSO component. This is majorly with respect to how they are governing their processes, how they are managing their processes using the COSO framework. So this I'm not covering now because it will take another 5-10 minutes. So, and whether the controls are manual or
You
automated controls, all those
you
things are
can
there.
take 3-4 minutes because it's really interesting and the student will definitely get the essence.
Yes, thank you very
Otherwise,
much.
they
Thank
will
you very
miss
much.
something.
Yeah, yeah, yeah. Thank you. So what happens here? So rest of the things I've already covered, I'm not covering again. But what new is there in this sheet? We need to identify whether a particular control is a key control or a non-key control. What happens? Say, for example, it's not necessary that every control or there will be only one control against one risk. There might be a possibility that two controls in combination can address one risk, or two risks are addressed by by a single control. That is also possible. So the main control which is addressing a risk majorly is known as a key control, and non-key control is the one which is supporting the main control to address that risk completely. So that identification is necessary, that which is a key control and which is a non-key control. The next is whether the control is an automated control or a manual control, whether it will be done automatically by the system or it has to be done manually by a person. So that understanding is also very important. Then whether this control is a financial control or an operational control. This preventive detective which we have discussed already, what is the frequency of this control? Whether it is exercised at every transaction level, whether BRS is being made on a monthly basis, so that control is a monthly control. So that frequency also needs to be understood and captured, and based on that we do our testing. And if any further recommendations we have, then we give those recommendations to the clients to be implemented, or in actual process if any gaps are there, those gaps we can communicate to them. So this is about P2P RCM. These are the findings, the improvement areas which we have identified based on the review of this P2P. If you take an example, the first example only I'll discuss, that we have observed that there are unapproved SOPs. SOPs are there in place, but that those have not been approved by the management. Then how we can consider as the policies and procedures of the organization? We cannot consider it as a valid SOP. So the observation here was the SOP for the P2P process has been prepared. However, it has not yet been circulated and signed by the management for review and approval. And risk rating is high because since SOP itself will not be there, that is definitely a significant risk, high risk area. Risk category is control, and what is its implication and what recommendation we are giving to the client. The recommendation which we gave, the SOP shall be approved by the management and circulated among the entire team. So this is the recommendation. Then finally we are coming to the end of it now. See, ma'am, I think if I have to cover the rest of the things, then it will take some more time. I think a few things are still left. So what should I do?
We can continue to the next session. We are having our next session
Yeah.
on Wednesday.
Yes, 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 yes. That
Yeah.
we can do.
So I
That
think
we
we
can.
can continue with the same on 17th of
Only
June.
five,
And
10 more minutes will be required. 10 minutes will be
if,
sufficient, I
if
think.
5 minutes, we can conclude. Otherwise, we can continue in next session.
Yes, 5 minutes. In 5 minutes, I'll be able to cover it now.
Okay, please stick.
Yeah. Okay. Okay. Thank you. So what happens? Uh, Take the first example. This is also related to purchases. The sub process is issuance of requisition. Control numbering has been done. Description of control is stores department does not accept any issue requisition from the user department unless and until the same has been approved by the head of the user department. So user department's head to approve has to approve the indent, then only stores department will accept it for issuance of the material. Now here uh, how we are assessing the design of the control, how we are testing the design of the control, whether design of the control itself is appropriate or not. So first parameter for which we are testing it is appropriateness, considering the significance of risk. Based on the significance of risk, we are considering the appropriateness. Like this control comprise of preparation of the issue requisition by the employee of the concerned user department, review and approval by the head, this is also covered, and submission of the requisition to the stores department, and post that stores department is verifying the content too. So in our view, this control design seems to be okay to us. Now moving to the next parameter, competence and authority of the person performing the control. Who is performing this control? This control is being exercised by the head of the user department and the stores department manager, and both the persons are competent enough to do this job. So here also, from this perspective also, the design of the control seems okay to us. Now coming to the frequency and consistency, this control is exercised consistently as and when the issue requisition is raised. So this control is as and when a requisition will be raised, this control is being exercised. So frequency also seems to be on a okay side. Now coming to level of aggregation and predictability. This control is exercised at lowest level of aggregation as it covers each and every issue requisition. So we are not averaging things here. What we are doing at every requisition level, this control is being exercised. So level of aggregation and predictability is not there. So from this perspective also, this control seems to be okay to us. Now, criteria for investigation and follow-up. The company does not allow any deviation in the predefined process of issue and issue requisition. So they do not accept any exceptions. If the requisition is not, if the indent is not approved by the department head, that will not be accepted by the stores person and he will not process it further. So that control is there. Dependency on other controls or information. This control is dependent on the requisition raised by the user department. So it is dependent on the requisition raised. Once requisition is raised, then only user department and stores department will come in action. IPE, information provided produced by the entity. If this requisition is created by the system, by their automated system, then this IPE is generated by the system. Information produced or provided by the entity is very simple. What information we have received from the client, whether it is being generated by the system or it is generated manually. If it is generated by the system, whether it is a customized software or it is a standard report generation, which the data which has been provided to us. If it is standard, risk is low. If it is customized, risk is high. If there is a design gap, no, there is no design gap which we could identify. DNI testing reference, then testing reference is there, how we have tested it and what is the remediation plan. So this is the way we test control design. DNI testing, one sample we have picked and we have tested it from end to end, right from where it initiated until the transaction is fully complete. The whole process, whatever has been documented in their SOP, whether that has been followed or not, that we have tested through this DNI testing, and we have tested only one sample because we are just trying to walk through the process. So here number of samples does not matter at all because we are trying to understand the process, whether it is implemented or not. Similarly, operating effectiveness testing. So here definitely number of samples should be higher and we test whether the controls were effective throughout the year or not. And this is the way through which we do the sample testing. You can go through it on in your free time, you can just go through it. And then finally, this is the case study which you can solve yourself. This is a very simple case study. It will take 5 minutes of reading, and then you will be able to respond to it yourself, I'm very sure. Okay, so that's it from my side, ma'am. I'm done. Thank you very much. So I'm done. So I'm really happy, really glad to be interacting with you. You asked very, very relevant questions, very good questions. We were actually very good questions, and I'm sure that you must have got some insights from this session. And we will be continuing in the next session, next topic, and ma'am will give you feedback regarding that. Thank you. Hello.
In fact, students wrote that please continue. It's a really very interesting and wonderful session. So,
Thank you. Thank you so much. Thank you so much.
so based on that feedback also, we continue the same. So,
Yeah.
dear students, as we conclude today's session on risk assessment and internal control evaluation, it is very important to remember that effective auditing begins with a thorough understanding of risk and controls. Those are designed to mitigate them, right? Because risk assessment is not merely a compliance exercise. This foundation, as I already mentioned in the beginning itself, that it is the foundation upon which audit planning, execution, professional judgment all are built, and opinion is also expressed on the basis of same. So a robust evaluation of internal control enable auditor to identify area of focus, their efforts on matter of significance, and also it enhance the overall quality and reliability of audit process. So in overall, I can say that I hope today's discussion has provided practical insights and reinforced the importance of linking auditing standards with practical, real life case scenario, real world application. So thank you all for your active participation and engagement. And thank you to the IT team. Thank you to our learned faculty. Wishing you all continued success in applying these concepts to strengthen audit effectiveness and add value to your studies as well as your professional endeavors in future. So risk assessment identifies where attention is needed and internal control determine how confidence is built, right? So with this, I thank once again to our esteemed, to our learned faculty, CA Roshan Bajaj ji, and we are having our next session on the same topic on 17th of June again at 4 p.m. Risk assessment and internal control evaluation will be continued. I hope till that time you will revise the relevant standards which we have covered today, because more or less the topic is based on the same. And sir has shown you in the PPT also. So I hope you are able to correlate, and please come after reading. You will really enjoy that in depth. In fact, you will be able to ask your doubts also, right? Definitely, it is linked with practical insights, how it is practically implemented. But of course, support can more stronger our base will be if we are well prepared, or if we have knowledge of theoretical part of standard also. If both are together, then definitely nobody can stop our knowledge to reach at the best of the level, right? So with this, thank you very much, and looking forward to see you on 17th June. Yeah, Roshan sir want to add something.
No,
Yes, sir.
I just want to clarify something, that the same batch of students will be attending the 17th session also, which is on the same topic.
Pardon?
So
Yeah.
what is the format? I did not understand. So this batch has attended this session on risk assessment and internal control evaluation. So the same topic we will be taking on 17th. So same
Yes,
set of
yes.
students will be
And
attending it.
faculty is same. We will be having C. Roshan Bajaj ji only on 17th June. And
Yeah.
topic is same. And sir, most of the students are same. But
Okay.
yes, some more are also added.
Okay, okay, got your point. So,
Yeah.
so they will be in a position to ask more questions that day. So I'll be
Yes,
expecting
yes.
many more questions from you guys. So
Certainly.
come
So
up
that
with
is the
many more
reason I
questions.
said they need to read, they need to study, and they can definitely ask the doubts in the beginning or in between also. And
Yeah.
you have seen that sir appreciated your doubts, your questions, and answered you in practical manner so that you can understand that why it is practically important. So we have already exceeded the time limit, and thank you very much for your feedback, Bindu, Kuldeep, and Nazir. And yeah, Nazir, which class has been postponed? Actually, we are scheduled for session on 27th of June, and that is on substantive testing, right? So due to some urgent commitment of faculty, we need to reschedule it. So we want it to postpone to 29 June, that is Monday, 4 p.m. to 6 p.m. As our this session is specifically on Wednesday and Saturday. So we are just changing the day so that rest of the session can continue as per the schedule. So for that, just wanted to take confirmation. I hope, Nazir, it's clear, right? So that is the reason I asked you in the session only, that if some of the students, they have any commitment or if they find difficulty, they can write to us. Otherwise, since we have to reschedule it, so we were planning to have it on 29th only rather than shifting it to next Wednesday and Saturday, whole schedule to be postponed and shifted. We just wanted to have reschedulement of only one session, but of course, we are going to change the day to continue with the rest of the session as per the schedule. So that is the reason I asked for your feedback. And of course, your feedback is very important and crucial. And those students who could not join today and they will be seeing the same virtually, they can also share their feedback, because really your feedback is very, very important and crucial, and because it helps us to improvise the rest of the sessions which are upcoming. And this program was initiated to see the issues which students find when they were not able to perform in the auditing subject. So reason behind this initiative was the same. And now we are trying to correlate the theoretical concept with practical, and you can have better understanding. So do share your feedback in context of faculty, in context of with respect to number of sessions, that yes, you want some more sessions. Okay, so all those factors considering, we require your feedback. Please share your feedback. Thank you. Thank you very much for attending this session, and thank you for your patience listening, being attentive and participating, and expecting more participation on the 17th June, right? And thank you to our learned faculty. Once again, Roshanji took out time from his busy schedule. He is imparting his knowledge with the very senior members, and he came for our students so that they can, because they are our future professionals, right? So thank you very much, Roshan sir. Thank you to the technical team, and thank you to each and every participant, each and every student, those who are watching the session. Thank you. So looking forward to see you all on 17 June with the same topic, risk assessment and internal control evaluation. By the time, tata, bye-bye. Thank you. Have a good day.
Thank you very much. Thank you.